Good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admirals. It's Friday, it's the 20th of August, 2021. And today we want to look at a very fascinating topic. In fact, one which is obviously directly connected to trading in general, trading psychology here. But I'd like to give you some deeper thoughts on how to find your zone in this context and what is in fact one of the probably main reasons here why you find your zone or why you don't find your zone, what the zone is, and so on and so forth. That's something we'll introduce here within the next minutes. So today's topic, well, in fact, a very fascinating one, and I hope you enjoyed as much as I enjoyed preparing here this presentation for you. If you watch this now, the recording on YouTube, then feel free. Please subscribe to the YouTube channel, set a reminder so that you don't miss any of the videos that we produce here for you. And that's it on the introduction. So let's here jump straight away right into the action. And in this context now, have a look at today's topic. So trading psychology, how to find your personal biochemistry cocktail to stay in your zone. That's today's topic. Before we start, I'd like to here give you an introduction to Admirals. I'm sure you obviously already know who Admirals, respectively Admiral Markets, former Admiral Markets is. It's a global financial service provider, in fact, who started 20 years ago as a FX and CFD broker, right now with over 8,000 financial instruments being tradable via CFDs, so from the long but also from the short side, but also Admirals is acting as a well, let's call it an invest solution. You can use Admiral as a true multi-asset broker also to invest part of your funds then in longer term positions here in an invest MT5 in this context, buy physical stocks or ETFs in this context, fully regulated broker, and having a global presence, in fact, so with offices around the globe. And currently Admirals or Admiral Markets is seeing a rebranding, which is taking place. So Admiral Markets becomes Admirals here, a financial hub, if you want. And that means, for example, that you also now can, for example, use a credit card, Admiral's credit card in this context. And there's further plans here to increase then the overall financial service provision. And in this context, so feel free to reach out to admirals.com and find any further information there. As I already pointed out, global presence. That means if you reach out to the service there, it's a high likelihood that you will find someone speaking your native language. I mean, here in English, obviously, this is not a big issue, but also, there might be people now listening to this in English, but their native language might be a complete different language. In my case, for example, it's German. Admirals has a presence here in Germany, and so I can directly talk to the service. If I have any questions around my account or any questions around new products being offered, instruments being tradable, and so on and so forth, I can find someone speaking German. English is not a problem, but still, I know as a former bank employee, I know that especially when it comes to questions around financial topics, then you prefer to talk to someone in your native language. And so feel free to reach out to Admirals directly. I'll show at the end of the presentation here some contact details. One world, one broker, fully regulated. That means it's not just a regulation here for the EU in this context, SISIC regulation, but also FCA regulated, ASIC regulated in Australia in this context, but also now we have a presence here from Admirals in Jordan, for example. So also around every regulatory body, all information is being available on the website. Contact details, I said I shared them at the end of the webinar, but still you can already find Admirals here, for example, on Instagram, but also on Facebook, YouTube, as I mentioned already at the beginning. And that's it around the introduction. Now let's jump straight into the action, have a look here at today's agenda and the questions we want to answer. So this is something, again, that's more like to some of you probably that looks a little academic, let's say. So the question, what are neurotransmitters, for example? But I think to understand this concept and those little pieces who let you feel what you feel and let you behave how you behave under certain circumstances is in fact crucial to also understand why it's so important, as we will see, to, for example, start out small and don't risk too much at the beginning, and which role here in this context these neurotransmitters play. This is something we'll cover within the upcoming minutes here. So this is already to some extent then bringing us to the question, what are neurotransmitters responsible for? Obviously, so, and then also how do neurotransmitters affect our trading, and how we can use this knowledge and around neurotransmitters for our trading in the future. So in German, when we talk about neurotransmitters, I mean, the German word for this is Neurotransmitter. It's the same. It's like, but to make it more, how can I say, how more accessible to someone you explain this concept to, what you usually do is you talk about so-called Glückshormone. It's hormones who are responsible for feeling lucky or feeling happy under certain circumstances. I'm not really sure whether there's something similar. Let me just, by the way, good afternoon, traders. Let me just here type in something in the chat box. This is the place where you can ask all your questions. And now, by the way, this is a question which is striking my mind right now. Let me just see if there's something like Glückshormon in happiness hormone. Okay, yeah. Well, I'm not sure whether this is a fair way to put it, but it's hormones which are responsible here for positive but also negative feelings. And so the more biological word for this is neurotransmitters, and these neurotransmitters are often transferred or are often referred to as body's chemical messengers, in fact. And some of you know them already. In fact, the main neurotransmitters we want to look at here today, they are serotonin, they are cortisol, there are testosterone. Testosterone is probably one of the key neurotransmitters we should have a look at, respectively, we should be aware of, especially from a male perspective. So there's a question. Sometimes I received this question several times. In fact, why do mostly men trade? Why aren't so much more women trading the markets? And sometimes there's also a reference where you can hear that it's said that women are better traders. Not really sure if this is the case or not, and that this is not the question we want to answer here today, but one of the main reasons why usually men tend to trade more often or can be found in the world of trading has to do with the fact of testosterone and the natural aggressiveness and this risk-taking approach, which goes hand in hand with having testosterone or more than more testosterone within us men than women have testosterone within them. And this is also something, I mean, it's bringing us directly to the point we will have the next slide. We will see here what are these neurotransmitters are responsible for. But in case of testosterone, it's not just the aggressiveness, but it's also the willingness to take risks, the natural willingness to take risks. And this is usually something which is driven, or not just usually, but this is something which is naturally driven by testosterone. And one of the key reasons why, in fact, there's more men than women trading the markets. We have dopamine. Dopamine is also something very, very interesting. Oxytocin. This is also something which is very interesting. It's a neurotransmitter which is can be found in is it called mother milk? So it's the milk from a mother which she gives to her newborn in this context. And so within this you can find this oxytocin. which is also something which is interesting, because usually you say you want to have kind of a, let's say, balance of all these neurotransmitters. But in case of oxytocin, it's usually that you say you can't have enough of that. So you don't want to be full of testosterone. This is something you want to avoid. I mean, one hand, it goes hand in hand with aggressiveness, and if you're a UFC fighter or something like that, well, sure, well, you like to have as much testosterone as possible, taking risks, being aggressive, and somehow win the fight you might be in. But usually you want to have kind of a balance, because too much testosterone in this context also favors then taking risks, which are probably a little too much. In case of oxytocin, it's like it's the feeling of how can I say that, it's the feeling of, to some extent, yeah, love. It's like it's trust. It's a liaison, let's call it. So you feel just connected to someone, and this is something you just can't get enough from. And probably the only neurotransmitter where I would say this is where you want to have as much as possible from, let's say. And then we have also actin in this context. The ones we want to focus on today is serotonin and dopamine, especially, not necessarily testosterone. I mean, to some extent, it's self-explaining, as I already pointed out, with the risk, willingness to take risks, respectively, natural aggressiveness, to hit the button, to enter a position, but also then to some extent trying to somehow put a ceiling or dampen the impact of testosterone when it comes to getting out of a position. So this is also something like, I want to fight with the market now, and I want to see whether I'm still right on the trade, even if the market is moving against me. Well, obviously, this is a bad sign. Usually, the market doesn't care about your willingness to fight with them, but the market just moves on and ignores you. Let's put it that way. But today, what we want to do is we want to focus on serotonin and dopamine, but also put some perspective here on cortisol. This is also something which is worth noting in this context. What I have now here is an illustration on what these neurotransmitters I just introduced in the slide before are responsible for. So in case of, for example, serotonin here, we have cognition, we have intelligence, we have ease, we have serenity. So this is something which is crucial. By the way, this is a little difficult because it's too in orange here. Even though dopamine also here, motivation, joy, lust in this context, this is something which is they go hand in hand. Let's put it that way. These are the neurotransmitters you want to know about when it comes to learning in this context. So you want to stay in the game. You want to continue to learn, even if you just lost money, for example, and to keep this high level of motivation, it's necessary to have a certain level of serotonin, respectively dopamine, as we will see in the next slide here. In case of actin, it's the neurotransmitter responsible for viewing, but also learning. I already talked about oxytocin here in this context, so love, trust, liaison. Cortisol is interesting because obviously testosterone, courage, confidence. Well, I think this is now self-explaining, but fear and stress. This is something which is of high importance for us as traders, obviously. So we probably could have had here a presentation on this topic, cortisol, fear and stress in this context, neurotransmitter on its own. So why is this of importance? Let me probably tell you a personal story in my case. I wasn't aware of that, by the way. So that is it's already several years ago, 15, 20 years ago, so long ago. But the thing is, you probably have heard about going on tilt. This is something where you just try to, you're kind of in, let's say, in a revenge mode, let's put it that way. Tilt is usually poker lingo. So it comes from the world of poker in this context. So the world of gambling, but also professional gambling, so playing poker. And I was always fascinated by the world of poker. And probably some of you probably write it in the chat box, or write it probably below the video. If you're watching this now on YouTube, the recording, you like it, and you feel, okay, this is exactly my topic. I thought about this already before. Write it down in the description box. Let's start a discussion on that. I think this is very valuable also in the long run to understand yourself better, and then exchange ideas with people feeling the same way, and certain under certain aspects in their trading. So you probably know the classic poker game. So like no limit hold'em, for example. So you get two cards, and then you have those two cards, and then you combine these two with the board, and then you try to beat the other hand of your opponent. So now, from a pure mathematical standpoint, you can say, for example, if you get kind of, let's say, a pair of aces, that's the best starting hand in no limit hold'em you can get. And then you're playing against someone who's holding ace king, for example. So there's this classic aggressiveness pre-flop game, we can call this. You raise, and then the other re-raises you, and you go over, push all in, showdown. So you turn over your cards, it's aces against ace king. And then you have, from a pure mathematical standpoint, a 91% chance with your pair of aces to win against ace king, because he now hits to hit two kings on the board, or he has to hit, for example, a straight or a flush or whatever. But it will be really, really difficult to hit exactly that hand. And then it's 1 out of 10, in fact, that you on average win this hand if you're holding ace king. And so now, as you probably have played several hands, this happens, you feel it to some extent at least. It happens more often than you like to see it happening, especially when it's about a big pot you're playing there, for example. The same is true, by the way. Probably wonder why I'm talking about trading, poker here. It's the same in the world of trading. So let's say you have the A+++ setup. So you just know that this setup will work most of the time. Let's say it's a stock you're watching, and the stock just or the company released just earnings. They were crushing earnings. You have an overall bullish environment in which you find yourself. So it's like, say it's a tech company. It's a semiconductor or something like that. And tech is also very, very strong. Just saw a new breakout to new highs, whatever. So strong earnings. Then you see the market opening, strong open. You just gap up. The market opens above its after hours, respectively, pre-market highs here in this context. It's a strong opening drive. You don't want to take this opening drive itself, but you see the strong opening drive. But you say, after the strong opening drive, the market holding above the pre-market highs here, and above, let's say, volume weighted average price, VWAP, for example, holding. And then you say, okay, now I'm trading the breakout on the upside. It's like it's a well, let's call it a trade to hold until reason to sell. If you trade the breakout, you can expect the market to continue to trend. The strength should continue. So it's a A+++ setup. It's like the trade, and you're willing to take risk here. Also, you're willing to take you have clear risk money management parameters in this context. So it's not just that you go all in, but you have a clear picture, you have a clear vision, you have a 100% hypothesis. You just know what you're doing in this spot. You just know what you want to see. And instead of breaking out on the upside, some news hits the tape and the market just crashes for whatever reason. So it's not a crash, but it's like the market flushes down, you're getting stopped out. You just lost, let's say, half of your daily loss. Probably you're because you went all in for your daily loss. Let's say you're risking 100 euros per day. And in this context, you were willing to take these 100 euros and put it as a risk on this trade. Increase the position size because you thought this is my spot. This is where I want to be. Usually you take these 100 euros and you split it in, let's say, 4 times 25 or something to have also the possibility to re-enter. But in this case, you just thought it's just one trade. It's the trade here, and I just have to take the risk. This is like you're turning over aces and the other guys turning over ace king. You have a 90% chance of winning the hand. In case of a trading, well, it's like the breakout will occur and the market will not look back. Then the news hits the wire, whatever it might be, just pulls in, you're getting stopped out, day over. And then even more frustrating then, the market will flush you out. And then it's like kind of a news, which is turns out to be not true. It's a fake news, whatever. And the market just turns around, moves, but unfortunately without you, because you got flushed out and you're very disciplined in this context and saying, okay, I'm just risking 100 euros here, and this is my rule. I stick with my rules here in this case, and I'm just willing to lose 100 per day, and if I'm done, I'm done. So now the thing is that this is very, very frustrating. And this is something which will happen more often than you like, especially, and this is like then cognitive dissonances play a role here. Cognitive biases start to play a role. In this context, then how can I say, it seems to repeat over and over again. So you can do whatever you want. The trade, or the hand you're getting played out in this context can be so good, and you're a mathematical favorite over and over again. But at the end of the day, you're just losing money because it's variance. It's like you're on the wrong side of variance in this context. You just lose because it's also part of the game. 90% does not mean 100%. 90% means you're only right in 9 out of 10 cases. And it can be that 3 times in a row, even if you have a 90% hit rate on your setup here in this case, you just lose money, respectively, you lose the hand. You probably busted out of the tournament, or you just lost a big pot when it's a cash game in case of poker, or it's like you just blew away your daily stop limit here. You set for yourself for the day. So the thing now is that this is causing, after it happens over and over again. So at the beginning, it's like, okay, you can just take a deep breath. It's like you start to meditate, for example. You have certain techniques. I call this also inducing rationality in your trading. You can call this that way. But then there is this there's this, let's call it tipping point. And then you just can't take it anymore. It's just too much. The stress is getting so overwhelming, and it's so frustrating, and the pain connected to this is getting so unbearable, let's say, that you just say, okay, ... and then you just take it from there, and you just start to take revenge on the market. And now the thing is, that here, this is now the point. It's not just adrenaline, which is what's the word for this? The German word is ausgeschüttet. Let me just have a look here. Ausschütten. What's the word for this? Distribute. Yeah, it's distribute. Probably this is the good way to put it. Or it's poured out. It's like it's adrenaline, which is poured out. But if you stay at an elevated level here, or the adrenaline here stays at an elevated level, then it starts to get worse. And this is then the moment when your body starts to pour out cortisol. And this is then when it takes an impact, it has an impact. It starts your trading, or respectively your gambling, your poker game in this case, starts to affect your health, because then you just feel paralyzed. It's just like you don't see any sense in anything anymore. It's like you feel just frustrated. You let's say you switch off the PC, you go to bed, you can't really sleep well. The next morning you wake up, first thing you think about is the loss of the day before. This is a clear sign that your body is pouring out cortisol in this context, and something which is devastating, which can be the end, which has been the end to many trading careers, respectively. I mean, people cope with it in a different ways, but I mean, there are stories out there. I have heard about stories where people then start to, for example, drink heavily alcohol to just get to numb the pain, let's say. And this is where neurotransmitters obviously play a very heavy role here. And this is also showing why it's so important to have clear rules which help you to avoid this, but also to have something you can focus on. Then once these series just they happen, it's from a mathematical standpoint, you can't avoid it. This is just happening. You will find yourself in a drawdown. I, for myself, for example, have found a very effective way to cope with this, because back then in the days, I can talk about this because I felt that way. So it has been the case when I mean, I was a young guy, so I hadn't a family, I hadn't any responsibilities, so that was probably the good thing about this. Not sure how I would deal with this short period, it was a short period, but still I would have coped with this situation if I had the responsibility for a family or something like that. But I speak based on my personal feelings and the knowledge about what happened there, what happens to you. And it's like, it's also, I have a very good friend of mine. He's still a very good friend of mine. And he said back then, it was like you were a complete different person. It was like you were a complete different person. You just talked about this, your natural, let's say, positiveness, which everyone knows you for, was completely gone. And this is something which is giving you a very good idea. So this is something which is natural. It's human. It's driven by these neurotransmitters, in this case, cortisol. It's affecting your health. And it's something you have to avoid under all circumstances. And after you realize that, after I realized that, that was the point, the tipping point then to realize, okay, I have to have clear rules. I have to know what I'm doing to stay ahead of my game every time. And once I lose track here, or once I leave this path I should stay on, I have to use techniques like meditation, for example, which help me to come back to this. This is like I have to have an anchor I can focus on then, and which helps me to get back on the path I have to stay on in this context, and not have this overwhelming stress, adrenaline, which then, the bad case in this context, then is resulting in cortisol, your body pouring out cortisol, and then finding yourself within this this is like a, it's like a how we call this, vicious circle. So it's like reinforcing and can get a big problem. So this is something I'd like to point out here in case of cortisol, and why we want to make this today a topic. So if you ever felt that way, well, in this context, it's very common that you're within this stage where your body is pouring out cortisol, and which you should reduce under all circumstances, because this is something which is, well, if you find yourself on this path, then really try to somehow make distance, bring yourself and trading, distance yourself from each other, find other ways to somehow, I don't know, go to the gym or talk to a friend or do something completely different from your trading to disconnect you from trading. This can help you then in this context to make a first step, but it's not the solution. It's like, well, if this is a problem right now and you start to ignore it, well, this is a short-term solution, but it will come back rather sooner or later. If you find yourself again within this loophole, well, then it will come back, probably even stronger, harder, and even more devastating than before. So that's one of the reasons why you have to have clear techniques and formulate ideas to keep the level of cortisol here in this context as low as possible in your trading. So this is definitely something I'd like to point out. But in fact, we are not talking solely about cortisol. It's just a thing just to show you how important it is to understand the dynamics behind this and where this comes from. But what we want to do is today, we want to in fact focus here on serotonin and dopamine in this context. So these two, they are very fascinating, because these two neurotransmitters are responsible for motivation, joy, or lust in this context. And this is noteworthy because when we talk about learning, in case of trading, it's the learning experience, you trying to not just stay ahead of your game, but somehow, well, let's put it that way. There's a saying which is, if there's luck involved, then you have to focus on the process to develop yourself, get better. So in case of trading, you can have, as I pointed out, you can have the greatest trade hypothesis, and it makes sense in 9 out of 10 cases. And it trade, if you repeat it over and over again, you will definitely and naturally make money, because it just makes sense to, for example, as I just described, trade then in direction of this momentum and the earnings release or whatever. But the thing is, there's luck involved, which means you can have a great hypothesis on this trade, but still it can turn out to be a loser. The same is true the other way around. So you can be the worst trader and just say, okay, I'm going long this stock for whatever reason, and it turns out to be a winner. You think you're the greatest. So purely from it can be your trades can turn out to be winners or losers by just by luck. This is the reason why you have to focus. And if you want to become a great trader, a professional trader, a profitable trader, you have to focus really on the process. You have to feel happy to make yourself better as a trader. So sometimes as people look at me in a very I don't know, skeptical way probably. They ask me, oh, hey, well, how was your trading week going? And what did you make money? And I said, no, I didn't make any money. Oh, well, you feel really bad right now, no? So, and then I say, no, I have to admit, I feel great. It's like I had such a great learning experience because of this and that. And it's like the process, you have to really love to learn something new in this context. And this is irritating for many people because many people just think it's about the money, but this is just a byproduct. When it comes to profitability in trading and making money, it's just a byproduct. It's the natural result out of the fact that you take the right decisions over and over again, and you capitalize on them. And this is only possible because you learned out of your former mistakes in this context. And this is where dopamine and serotonin then come into play. And so why it's so important to point this out is because serotonin and dopamine strongly support the learning process. So let's say if you have joyful, if you are joyful, or if you're motivated to learn, you see progress and positive results, and you connect positive feelings to it, you keep on learning. So this is then where it turns out that a routine turns into a habit. So there's this cue. I was talking about. No, it wasn't the cue. There was this process, but I'm missing the words for this right now. So 1 second. Let me just see. A great book on this context, by the way, is Charles Duhigg. Yes, it's in fact it's 3. It's 3 steps. Okay, it's Q. It's like there's Q. So okay, this is the first step when it comes to turn a routine into a habit. It's a trigger which tells you that your brain goes to some extent into an automatic mode, which habit you use then. And then there is the routine. So for example, brushing your teeth. Let's put it, make it simple. Let's say just brushing your teeth, okay? So we all agree that this is something we just do naturally, but we can't really understand why we do that. And the reason for that, why it's a routine already and why we do this naturally. And so what happens, the cue is here, let's say at the evening, and in the evening you don't like you have a day after, let's say you come home and you just feel like, okay, I have to brush my teeth. Okay, fair enough. So the routine then is you brush your teeth. This is the routine. Q is I have to because I don't feel comfortable, so I brush my teeth. And now the question is interesting to make it a repeat. So to repeat it in the future, you have to also get a reward out of this. And so the question now comes into play. What is the reward by brushing your teeth? You feel clean after that. It's like it's a positive feeling. That's one of the reasons also why, for example, there is what's the English word for Schaum? It's let me just see. Wow. It's like if you brush your teeth, translator. Let me just see. Where's German? There we have German. Foam. Yeah, foam. I'm not really sure if this is true, but yeah. So like you brush it. Is it necessary that there's a foam connected to brushing your teeth? In fact, it's not. It doesn't make a difference. But you feel cleaner after that. This is the reward you get, and that's why you repeat this over and over again. So in my case, for example, it's like I have a clear routine. You've seen that in the past. Today is different because today I already know that I don't have time to trade US equities right at the open. So I didn't really skip the routine in terms of preparation, but I don't point out all the details I need, in fact. Have to focus on something different. But usually it's like I have a bell, an inner bell, let's say, which rings once a certain time is hit. So it's 2 p.m. German time, for example. This is my bell. This is the cue here, which triggers my routine. So I check out which stocks for today are hot. And then I have my routine. I go through certain steps, like what's the average daily trading volume? What's the pre-market volume gap? Is there any fundamental catalyst, something like that? I repeat this over and over again. And now the question is, okay, what's the reward? Why do I repeat this over and over again? Because I see that this routine here, which turned already into a habit, in which I do completely natural, the reward for this is I'm well prepared for the US markets then in this case. So I can hold a webinar here, switch over to the trading station, and right now see where we stand and what I want to see, which levels are of interest here. And that being said, then naturally results in profitable trading decisions, which result in a rising equity curve. But even if I see a losing day, I continue with my routine then in terms of also taking notes on how I felt, for example. I have a clear routine which tells me, okay, what did I do good today? What went well? What didn't went well? If I don't do this, I don't feel comfortable. This is the same, for example, when it comes to go to the gym. So I have 3 days a week, I go to the gym. I meet with a friend, I go to the gym. The same is true for him. If I miss one reason or one day here, I feel miserable. I just feel horrible because the reward of feeling good, going to the gym and afterwards having just this pumped up feeling, let's say, this is something which is really this is the reward I get out of this. And this is something you have to find for yourself then in this context, and where serotonin and dopamine then play a very important role. So now the thing is, let's come back to the presentation and why this is of interest here. So supporting the learning process then, what is the positive feeling you connect with this? Well, you see that you make a step into the right direction, let's say. But let's be very concrete on this topic. Just imagine you start out trading too big. You have too much risk on once you open a position. So this is especially true at the beginning. What will happen is you feel stress. Stress, by the way, cortisol, remember that. It will, if you lose, it will frustrate you. Frustration means, well, it will be cortisol in the first place, while there will be a low level of dopamine and serotonin in this context, which means like you have to stay at a level. Once you get comfortable, then you can certainly risk more, but there will naturally be a process toward this to increase your position size. But you want to make sure that you stay motivated. If you're too big at the beginning, well, obviously, this is, if you lose money, well, this is frustrating. The same is also true if you're too small. This is one of the reasons why I'm not 100% I'm sure anymore if I'd really like to say you have to take your demo trading very, very seriously. I mean, sure, certainly you have to, but still I can fully understand someone saying, I don't like to trade demo because this is not motivating me. This is like this is play money. Certainly, sometimes you have to punish yourself for example, not respecting your daily loss limit, for example. So if you say I'm willing to risk 100, and at the end of the day you look at your account and you lost 500, you obviously broke your rules, and there must be a punishment to this. So the punishment won't be some I don't know, push-ups or something like that, but the punishment will be the next week you'll just trade 100% demo. Okay, so this is also something, or at least in my case, so probably people handle this differently depending on the personality. But in my case, for example, there's no question about that. So if I break my rules that heavily, I have to punish myself. I go to demo and I trade demo in this context. It didn't happen that often in the last, let's say, 10 years, but still. So still, I can understand that if people say, okay, demo is not really motivating me. So the learning process, this is kind of interrupting then the learning process, the willingness to learn more, and the joy is not given, because then the adrenaline in this context plays a role. The adrenaline, the flush you get once you enter a position. So also here in my case, this is much reduced over the years, but still, it's sometimes you just feel that. It's like this is like a signal from your body sending, well, you're still alive, you're a trader in this context. And this is something which is still very positive, but something you have to remember here in this context. So small live trading, not too big, not too small, you have to find yourself. And that's one of the reasons why it's so important. And there we close the cycle. Why it's why I usually go with the saying that I say, well, you have to understand you have to know you have to go into your inner feelings and ask you the question, who am I? So what makes me, why I'm here, for example, to just give one question as a hint here, and then take it from there and just build here you're trading around your personality. It's not that you trade and then you try to be a trader, but you are a trader, and the trader you are depends on who you are. And this is the main question, the key question you have to answer for yourself to take it then from there and build your personality. And so what I want to now do is I want to show you here the zone I mentioned at the beginning of this presentation. What is the zone? The zone is in fact based on the so-called Jerks-Dodson model. It's here the point there. That's the optimal arousal. This is the a level where you just where you are in this context, where you just feel in your zone. This is where you perform at your highest possible level, and it obviously depends on your arousal in this context. So here, for example, increasing attention and interest. This is something which is very important. If someone comes to me and says, well, emotions in trading, you should avoid them under all circumstances, I know what he means, but he's talking purely about negative emotions. He's not talking about the positive emotions you need. In this case, interest, attention, arousal level you need to reach to perform at your highest level. So for example, if you watch a soccer game, for example, you will see that the players before the game, they warm up to be able to perform at their highest possible level. So because else, if they start completely cold and without having warmed up here, what they will have is a natural tendency, or respectively a higher risk of getting injured. So this is what naturally will happen. That's one of the reasons why they have to see that they already start warmed up into the game. So they have to have a certain arousal level. This can be completely different motivation in this context. Some people say, I need to some extent kind of a monetary motivation, let's say. So like some people just need here in this context to have kind of a risk of not having enough money at the end of the end of the month, for example. So to make ends meet. Usually, at least in my personal opinion, this is not a very good motivator in this context. But some people need this. So this is one of the reasons why I say it's very flexible, and it's not. It's like you have to understand that what's true for you is not necessarily true for someone else. It's also possible that you say, I want to learn something today. I just want to make today count, let's say. And therefore, I have a clear vision on the trade. And then if it's a losing trade, it's really a losing trade if you don't learn something out of this. This is also something which is a great motivator in this context. But what you have to be aware of is, if there is this stress point, the tipping point, which you hear, where you just can't take it anymore, let's say, this is then the moment where you have impaired performance because of, let's say, strong anxiety, for example, losing money because the position size is too big or something like that. So your target is in fact to visualize this. What you want to do is you feel motivated to do something, but you don't want to feel completely stressed out here and completely involved in the action, which is killing you, let's say, based on too big position size or something like that. So what you need to find is, in fact, and this here the biochemistry cocktail comes into play. You have to find a point here within you, based on your personal needs, on your character in general, to stay here within this red circle, in fact. And so what we can consider this zone is, in fact, this neurotransmitter balance. So while reaching your zone, as I pointed already out, is something completely individual. So it's like you work with an anchor, for example. This is what works for some people. Some people work with a focus on a certain picture, or a certain picture they create in their mind. It's something very, very individual. But knowing that serotonin is released through, let's say, sweets, chocolate, for example, or dopamine is released through alcohol, nicotine, or coffee, we know this. Still, it's something you should take into account. I mean, you probably should find different ways to reach your zone. Even if I prefer having, I don't know, some sweets right at my desk, you should know that, and you should probably have kind of sweets, chocolate, or whatever, a small portion at least, on your desk if it's needed. The same is also true. Stay hydrated the whole day. So having a bottle of water standing right in beside your laptop, for example. But also, you should be aware of the fact that, in fact, here, dopamine in the morning, for example, if you have something like, I don't know, a liter of let's say coffee or something like that, well, that's probably a little too much, because here this can naturally negatively affect your trading performance and should be avoided. Still, there might be people saying, hey, I need a 1 liter of coffee every morning. In my case, for example, it's 2 cups of coffee, and I'm used to this. And in addition to that, I also know that I have naturally a natural ability to not perform good anymore if I don't have then in around noon 2 cups of tea, for example. So this is something I really need, and it's part of my daily routine to perform at my highest possible level, and something I really feel. Let's say, for example, there's a trade fair somewhere, and my routine is naturally interrupted. Well, then I don't have a chance here to grab a cup of tea, for example, or drink enough for the day. Around 2 p.m., 3 p.m., later in the day, I get headache. It's like really, it's pain. I feel like I can't perform at my highest level, possible level anymore. And this is something which can be avoided if you find ways then to, for example, drink enough. That's a simple idea, but just to get the idea behind this, it's something, again, it's very, very individual, but something you should keep in mind, and which directly affects your overall trading performance. So what, long thing short, what this means is you have to know exactly what you need to consume here, or how long you need to work out, or to work out at all, or all this. It's something you need to know so that you can increase your chances every day to stay at top of your game and reach your zone and stay in your zone here, which will naturally in the long run here positively affect your trading. So what you have to find is, you have to find a routine. You have to have habits here, and in this case, which you build out of having this cycle. So Q, then you have the routine, and then you have the reward, and repeat and do this over and over again until it becomes something you just do, and you don't need to think about anymore. This is the same also when it comes then to execute on your trades. So that brings us to today's summary. So neurotransmitters are often referred to as body's chemical messengers. And the main neurotransmitters, as we pointed out, are serotonin, cortisol, testosterone, dopamine, oxytocin, and actin. Serotonin and dopamine can be considered turbos when it comes to learning, and strongly support the learning process. So if you are joyful and are motivated to learn, you see progress and positive results, but especially connect positive feelings with it. You keep on learning. The same is true if you feel frustrated, if you feel stressed out, and if there's too much cortisol here, as a result, well, this is something which will naturally negatively affect not just your trading, but overall your overall, let's say, work-life balance, respectively, your overall health, in fact. So this is something you should definitely avoid. So in this case, as I pointed out, stress, pain, fear, release. On the other hand, the negative neurotransmitter, we can call this negative in this context. Sometimes it can also be some kind of worthy, if you have too much testosterone or something like that. So kind of a break, which your body throws out to keep you somehow a little to earth, let's say. But still, your main target should be find ways to reduce the impact of cortisol, especially when it comes to your overall feelings and when it comes to your overall trading. And so that's it on today's webinar. I just check out here the chat box, but it seems as if there's no questions. But I see that everyone stayed here. So that's a very interesting feedback, by the way. So usually what I saw over the years is, in fact, when I start to talk about trades and explain not just the strategy behind this, but especially from a risk and money management perspective, and get a little more mathematical, it's like that people usually tend to say, okay, this is not for me, and they just leave the event. When it comes to psychological things, something which everyone can somehow connect with, people stay the whole event. So much appreciated. I hope you enjoyed it. As I already pointed out, that you enjoyed the webinar and the content I provided as much as I here enjoyed. Let me just see here. Great. Okay. Perfect. Preparing it. So next webinar, it will be on Wednesday. It will be on the 25th of August, 2021. Check out the website, admirals.com. And there, the educations /webinars tab at the head of the web page. We will talk about inflation, yields, and US tech stocks, and the question on will the Nasdaq 100 here finally, we'll have to say, tank. So you probably have seen that volatility just pushed higher yesterday. I think, yeah, yesterday. Let's just see something happening right here. Let me just check it out. No, spider again above 441, strong opening drive. So it doesn't look as if we break lower. So VIX is coming down again, but still we are. Let's see if this continues. Next week we have the Jackson Hole Symposium. Probably this is then the reason where inflation becomes a bigger target and yields start to spike higher. We will prepare for this event, in fact, with the presentation, hot topic webinar. So correlation between yields and inflation in this context, how inflation developed over the last 12 months, and why the current inflation development could cause trouble for tech stocks and the Nasdaq. This is especially something we will focus on then. So again, admirals.com, check out here the education's webinar tab to register for the webinar. At the beginning, I said here are the contact details. If you want to reach out to Admirals, feel free to do so. Send an email, and fully regulated broker in this context. We have to share here in this context the risk disclaimer. Let me just again check here the chat box. Okay, perfect. So people enjoyed it. So here's the risk disclaimer. Let me just here stop it and come back here full screen. So I wish you all the best. Again, subscribe to the YouTube channel if you watch this recording now on YouTube. If you have any questions, comments, please feel free to post them below. Leave a thumb up here if you enjoyed it. And set a reminder for not missing out any of the upcoming webinars together with Paul, respectively Marcus, my colleagues. And so that's it from my end. Have a nice weekend. Enjoy yourself. Talk to you again next week. All the best. See you. Bye-bye.